Section 1. A Year of Two Halves 2024 in Review. The year 2024 will be etched in the annals of stock market history as a year of stark contrasts. We witnessed periods of exhilarating highs, fueled by technological innovation and accommodative monetary policy. Yet these highs were punctuated by moments of gut-wrenching lows, as geopolitical storms and the specter of inflation cast long shadows. The global economy, intricately intertwined with the performance of the stock market, experienced both tailwinds and headwinds throughout the year. The first half of the year was a bull's paradise. The tech sector, propelled by the AI revolution, led the charge, with companies like Nvidia posting staggering gains. The Federal Reserve, eager to sustain the economic recovery, kept interest rates low, further boosting market sentiment. The S&P 500 and Nasdaq soared to new heights, as investors rode a wave of optimism. However, the second half of the year saw a shift in the tide. Geopolitical tensions, particularly between the US and China, escalated, injecting a dose of uncertainty into the markets. The ongoing conflict in Ukraine and the flare-up between Israel and Hamas further exacerbated global anxieties. Inflation, though showing signs of easing, remained a persistent concern, prompting the Fed to signal a potential slowdown in its rate cuts. These factors combined to create a more volatile and risk-averse market environment in the latter half of the year. Section 2. Riding the wave highs of the market. The first half of 2024 was a testament to the power of technological innovation and its ability to drive market sentiment. The AI boom, in particular, captured the imagination of investors worldwide. Nvidia, a leading manufacturer of AI chips, saw its stock price more than double, as demand for its products skyrocketed. Other tech giants, including Apple, Microsoft, and Amazon, also benefited from the AI frenzy, posting impressive earnings growth and pushing their stock prices to record levels. The Federal Reserve's accommodative monetary policy provided further fuel to the market rally. The Fed's decision to cut interest rates 3 times in the first half of the year, bringing the benchmark rate down to 4.25 to 4.5%, was music to the ears of investors. Lower borrowing costs encouraged businesses to invest and expand, while consumers, armed with cheaper credit, opened their wallets, further stimulating economic activity. Section 3. Storm clouds gather, low points of 2024. The second half of 2024 saw a confluence of factors that conspired to dampen market sentiment. Geopolitical tensions, simmering beneath the surface for much of the year, erupted into the open, injecting a significant dose of uncertainty into the markets. The trade war between the US and China, despite periods of uneasy truce, continued to cast a long shadow over global trade. The ongoing conflict in Ukraine with no end in sight served as a constant reminder of geopolitical fragility. The sudden outbreak of hostilities between Israel and Hamas further added to the global unease. Inflation, though showing signs of moderating, remained a thorn in the side of policymakers and a source of anxiety for investors. While the Fed's rate cuts had helped to stimulate the economy, they had also contributed to rising prices. The Consumer Price Index, a key measure of inflation, remained stubbornly above the Fed's 2% target, raising concerns that the central bank might be forced to slam the brakes on its easy money policies. Section 4. The AI Revolution. A new era dawns. The year 2024 will be remembered as the year the AI revolution truly took hold. What began as a technological curiosity rapidly evolved into a transformative force, impacting every facet of our lives, from the way we work to the way we interact with the world around us. For investors, the AI boom presented a once-in-a-generation opportunity to capitalize on a paradigm-shifting technology. Nvidia, the undisputed leader in the AI chip market, became a Wall Street darling, its stock price soaring to stratospheric heights. The company's graphics processing units, originally designed for gaming, proved to be ideally suited for the complex calculations required for AI applications. Demand for Nvidia's chips far outstripped supply, propelling the company's market capitalization beyond the $3 trillion mark. Section 5. The Fed's Balancing Act, Stimulating Growth, Taming Inflation. The Federal Reserve faced a delicate balancing act in 2024. On the one hand, the central bank was eager to sustain the economic recovery, which, while robust, remained vulnerable to shocks. On the other hand, the Fed was keenly aware of the risks posed by rising inflation. The Fed's preferred measure of inflation, the Personal Consumption Expenditures or PCE price index, had been running above the central bank's 2% target for several months, raising concerns that price pressures were becoming more entrenched. In the first half of the year, the Fed opted to prioritize growth, cutting interest rates 3 times in an effort to keep the economic engine humming. These rate cuts, coupled with continued government spending, helped to propel the stock market to new highs. However, as inflation showed few signs of abating, the Fed began to signal a potential shift in its stance. Section 6. Geopolitical Tremors, Impact on Global Markets. Geopolitical events cast a long shadow over the 2024 stock market. The ongoing trade war between the United States and China, despite moments of tentative détente, continued to generate uncertainty, disrupting global supply chains and weighing on business sentiment. The conflict in Ukraine, with its devastating human toll and far-reaching economic consequences, served as a stark reminder of the interconnectedness of the global economy and the fragility of peace. Adding to the geopolitical anxieties was the sudden eruption of conflict between Israel and Hamas. The conflict, which erupted in the closing months of the year, sent shockwaves through the region and beyond, disrupting energy markets and further exacerbating global tensions. The conflict served as a stark reminder of the unpredictable nature of geopolitics and its potential to disrupt even the most well-laid economic plans. Section 7. Economic Impact, a Mixed Bag. The economic impact of the 2024 stock market's performance was a mixed bag. On the positive side, the AI boom and the overall strength of the technology sector led to significant job creation, particularly in high-skilled, high-wage industries. The Fed's accommodative monetary policy, while contributing to inflation, also helped to sustain economic growth, leading to a decline in the unemployment rate. Consumer spending, fueled by a strong labor market and low interest rates, remained a key driver of economic activity. However, the economic picture was not without its blemishes. Inflation, while moderating somewhat towards the end of the year, continued to erode consumer purchasing power, particularly for low and middle-income households. The rising cost of living, particularly for essentials like housing, healthcare, and education, put a strain on household budgets, leading to a decline in consumer confidence. The geopolitical uncertainties, particularly the trade war between the US and China and the conflict in Ukraine, also weighed on business investment and global trade, dampening economic growth prospects. Section 8. Looking ahead, challenges and opportunities. As we turn the page on 2024, the global economy stands at a crossroads. Challenges abound, from persistent inflation and the lingering effects of geopolitical tensions, to the ongoing climate crisis and the risk of new pandemics. Yet, amidst these challenges, opportunities also exist, driven by technological innovation, the transition to a more sustainable future, and the resilience of the human spirit. Navigating the economic landscape of the years ahead will require prudence, adaptability, and a willingness to embrace change. Policymakers will need to find the right balance between supporting economic growth and tackling inflation, while also addressing long-term challenges such as climate change and income inequality. Businesses will need to be agile and innovative, adapting to rapidly evolving consumer preferences and technological advancements. Section 9. Stay informed with VistaEdgeDynamics. Thank you for joining us on this roller coaster ride through the 2024 stock market. We hope you found our insights valuable. At VistaEdgeDynamics, we are committed to providing you with in-depth analysis and actionable intelligence to help you navigate the complexities of the global economy. Be sure to subscribe to our channel and hit the notification bell so you don't miss out on our upcoming videos, where we'll delve into specific economic trends, stock market forecasts, and investment strategies. Stay informed, stay ahead of the curve, and let's make some money together.